Hey everyone, what impact do traders have on the price of an asset in the near term? The answer is a lot, and it explains a lot of the near-term volatility in any asset. So, what is a trader? A trader is somebody who is trying to make money off an asset, but instead of holding it, buying it and holding it like a normal, sane person, they are trying to make money by speculating on short-term price movements. And if they guess right, then they are attempting to buy the asset when it's down temporarily and then sell it when it's up temporarily, and do that a bunch of times in a row. And if they're right, then they end up making some money that way. Now, the truth is they almost never actually make money. Traders are notorious, if you've heard the term day trading. The reason day trading is so notorious for making people lose money is because almost everybody who tries to do it loses money. And the same is true for just about any sort of trading. Typically, there's two types of people who try to day trade or just make money trading. One is very experienced, very sophisticated people on Wall Street who do it for a living, and some of those people actually do make money. So, they're good for them. But that's not a lot of the people. A lot of the people are average people who always, because of confirmation bias, they always remember thinking that they thought an asset was expensive back when it was high, and then they remember thinking they thought it was low back in retrospect when it was low, when the truth is they had absolutely no idea of predicting that in advance. So a bunch of the traders are people who have no idea what they're doing. They think, the average person thinks they're smarter than average, which of course is statistically impossible. But anyway, almost everybody, especially guys, I don't know why it's guys more than girls, but guys especially are just certain, until they've actually tried it, that surely they can try to predict when something feels like it's up versus down, and buy when it's down and sell when it's up, and just, ride that roller coaster and make some money. When the truth is, it's just difficult, if not impossible, to do that. In fact, I've never met somebody that with Bitcoin could make money doing that with any reliability. That doesn't mean people can't do it, for a few days or even a week or two or a month or two, but eventually they seem to always end up upside down and lose money, and would have been way better off if they had just bought Bitcoin and sat on it. And that's been almost universally the experience of everyone I know who's ever attempted to trade anything. Anyway, so trading is mostly for fools, other than a very small number of experienced people on Wall Street. But it results in some really interesting patterns in the near-term price data of Bitcoin. So regularly you will see some sort of catalyst, which means something happened, something that possibly could affect the price. And the traders, who are all sitting at their computers reading, Bitcoin Twitter and, following the news feeds, you can see in the price that all of them are like, ooh, maybe this is the catalyst that'll make the price go up. So they all start buying. But then the price doesn't quite go up as fast as they thought it was going to go up. So they immediately conclude, oh, maybe all the traders are not actually buying on this news. And so they start to sell. So then you see the price start to dip. And then it becomes clear that, oh, maybe there actually is a big deal. And so the price suddenly goes up the other way. And it's hilarious to watch it, because you can see these people just sitting at their computers predicting. And it's like a bunch of lemmings trying to predict which way the lemmings are going to run, and trying to decide, is this the big run? Is this not the big run? And they are just, traders are just horrible at predicting that sort of stuff. But one of the places you can see this sort of behavior most consistently is when the Federal Reserve releases changes to the interest rate. So everywhere in the economy, the people are watching what the Federal Reserve does with interest rates, because it effectively tells the marketplace how fast the money printers are going to be run by the Federal Reserve. And so you just see this all the time, that the Fed will come out, like, recently, a few weeks ago or a couple of weeks ago, and say, okay, we're going to, lower interest rates by 0.5%, which is a big reduction. When your interest rates are 5% and you lower it by 0.5%, that's basically 10% of the way to zero on interest rates. Anyway, so immediately the price of Bitcoin starts to spike. And then immediately it comes back down as everybody concludes that, wait, not everybody's buying on this news. And then immediately it starts going back again, up again, as the traders are all like, oh, but maybe we are all buying on this news. And then it goes back down when people conclude that, wait, but maybe not everybody. Maybe this is not as big as we thought. And it's just ridiculous to watch, because it's almost like you can see inside the heads of these traders as they all try to figure out what's going on, and they all try to predict what the other people are going to do, because the nature of trading is you've got to be doing what everybody's doing. If everybody's buying, you need to be buying, and if everybody's selling, you need to be selling. And the goal is to beat everyone to whatever it is they were about to do and do it right before them, which again is it's a fool's errand, but that's what people do. So often I can see this happen in, the course of a few minutes or even a few hours. When there's some sort of Bitcoin news, you'll see the price go up and down, in the near term, maybe, $1,000 or $2,000 out of total price right now of about $63,000. It'll start to go up to 64, and then it'll barely peak 64, and then it'll drop back down to, 63.5, and then down to 63. Ooh, and then it'll be, 62.9, and then boom, it'll quickly come back to 63.5. And again, this is just people speculating on what's about to happen and trying to be right about it. And again, the vast majority of them are just going to straight up lose money. The same is actually true on the US dollar. So if you think the US dollar is stable, people are speculating in foreign exchange markets all the time on the US dollar. And the only reason you don't see the variability is because everything is priced in dollars. And so when the US dollar devalues by 1 or 2% against all other foreign currencies, it's not like all the stores bother to go change all their prices 1 or 2% based on the foreign currency strength of the US dollar versus other foreign currencies. And so the US dollar does bounce around, obviously a lot less than Bitcoin, but that's only because Bitcoin is early and there's still a huge amount of upside left as the world adopts Bitcoin. But anyway, but you see this behavior, and there's people trading every asset, including the US dollar, against other currencies, and it behaves the exact same way. Every time there's some catalyst, there's some sort of news event, and everybody goes crazy trying to guess which way the market's going to go. So my recommendation to all of this is don't do it. Do not try to trade. You will lose. You will lose. You will lose. You will probably have to prove to yourself that you are going to lose before you understand that you can't do it any better than anyone else can do it. It's just don't do it. Just buy as much Bitcoin as you possibly can. Hold it as long as conceivably possible, and that historically has been the only formula that has consistently resulted in a lot of wealth being created by Bitcoin. So anyway, it is amusing to watch the price movements because, traders do cause a lot of the price movements, but you do not want to be one of those traders that is causing those price movements, because inevitably you will end up upside down and losing money, which is what happens virtually all the time. So anyway, have a great evening. Let me know if I could be of service on any front. Thanks, everyone.